Eric Mother, Mother.com, with part 1 of this weekend's market analysis video for the US markets for the weekend of July 2nd and July 3rd, 2016. Take a look at markets here and we can see that pretty much a slightly up day, or let's call it unchanged. Gold is up 1.3. We see that the VIX is down about 5%, trading under $15. With about 2 hours to go, let's take a look at how charts are setting up. We begin with the S&P 500. We've seen a nice recovery over the last 4 days. All right, and that is consistent with some of our analysis from the previous weekend analysis, as the S&P 500 did come and show support here. This is uniform activity below the blue line and back above it, so that tends to be good support. Also, there was another line coming off the recent lows, and if you go back to last weekend's analysis, you can see that this is the line we were watching. This RSI movement began the recovery of the lows in February, so we can draw a line from there. And the speculation was that the S&P 500 was coming back to test that level, and with uniform activity we could expect a bounce. So we got that uniform activity bounce below the green line, back above it. This is around this period, and so the last couple of days to the upside did make sense based on our last weekend market analysis. So now the one thing you're going to see in many charts is markets are coming back to test topside resistance. You got price channel resistance being tested right now on the daily, and also RSI topside resistance is being tested. So yes, we did get a bounce, but now we are coming back to levels where if the market cannot clear this RSI resistance line, and if the market cannot clear this price channel resistance line, then we should expect now there to be a swing trade to the downside. Take a look at the Nasdaq. Just another quick summary of why the market bounced technically from my point of view is we came back on the Nasdaq. We held the line right here on this support line, on this line, good support, and also coming off the lows of February, which was during this RSI movement, brought the market off the lows there. So we drew a line somewhere there, and you can see that the market bounced on both lines. So the movement higher this past week did make sense. Again, on the Nasdaq daily, we can see it's coming back to test topside resistance on price here, and also topside resistance on the RSI. Until we can clear that level, one can expect that markets are indicating that the next swing trade now is potentially to the downside. If we take a look at the Dow, we can see a nice gain for the week, about 3%. Why? Because it bounced back above 50, which is what we had speculated. It closed below 50 this past week, and now jumping above 50, which is why we are getting a good reversal to the upside. Having seen that, now we coming back to test the level that has been a problem. If you take a look at the top side, in fact, let's go back. This is a 2-year weekly chart. Let's take a look at a 3-year weekly for the Dow, and you'll see that this is a level where it has been showing a lot of resistance. This line has been a problem for the Dow. So until we can clear this line, we should still expect a pullback. So we need to clear that line if the market is to see higher prices. And also keep in mind that coming off the highs of 2015, so these highs here did coincide with the RSI breaking down here. It's something we've been watching over the last couple of weeks and months. So this RSI break, we can draw a line from there, which again right now is being tested. So week to week, we've rallied back to resistance. If we don't move above those two lines, then we can expect that the next swing trade is lower. So market bulls would try and figure out a way for the RSI to be breached to the upside. You'd like to see a breakout on the RSI if the market is to see higher prices. Keep in mind that if the market is to move higher, the Dow needs to clear 2016's weekly closing high, and the level it needs to move above is 18,375. So this is the recent weekly closing high for 2016. The Dow does need to move above that if it is to show strength and if it is to take out the RSI resistance. But given the resistance on the weekly chart, more than likely if the RSI shows resistance and starts pulling back, then we can expect the next swing trade still to be to the downside. If we take a look at the daily for the Dow, take a look at it's coming back to test this line here, which is topside resistance, or at least topside trend line. Also the RSI is coming back to test this line here, and we can see that it is already showing signs of stalling around here as of Friday's trade. We shall see, but this seems to be a logical place where one can expect the market to start struggling to move higher after a nice 4-day move to the upside. If we take a look at the Dow Transports Hourly, so let's go to the hourly for the Dow Transports. And here I'm using RSI setting of 26, just to be clear. And what you can see on the Dow Transports is that it is also coming back to test the top side of its hourly RSI, already showing signs of reversal. So hour to hour, we are seeing markets that are showing that now potentially the next swing trade is more and more likely going to be to the downside. We can see similar type analysis if we take a look at the S&P 500 hourly chart. And on the SPX, one can see price channel resistance here, or at least trend line resistance on the hourly right there. As long as that is showing resistance, we can expect a pullback. Keep in mind, we've really had a V-type formation here. This type of formations tends to be problematic. You might be running out of momentum here, suggesting that it would make sense for the market to pull back after a nice recovery over the last 4 days. Also on the RSI, we are coming back to test the top side of the hourly RSI, already showing resistance as of the last trading hours on Friday. There is also RSI resistance coming off this break here. That RSI break corresponds with the previous resistance, so we draw a line from here, and you can see that the market has struggled to hold above this red line with the resistance here for the highs, resistance again here before the plunge of about a week ago. So we are coming back and we are already showing resistance. So couple that with the previous analysis, that hour to hour we have price showing resistance and the RSI showing topside resistance. If you take all that into consideration, more than likely now we are pointing to a market that wants to pull back. In conclusion here, the S&P 500 was making an attempt this past week to break out yet again above the all-time monthly closing high, and it seems to be struggling again. So here is the number here that we've been watching for a breakout. Of course, we'd like to see the market punch through this number if we are going to see a resurgence of the bull market. So this has been a number that we've been watching for a breakout. The market needs to move above this level if it is to break out and move higher. Right now, again, another failure, and this failure has been taking place if you go back throughout this multi-months here. Many monthly attempts to break out above 21 or 7.39, but we've been unable to. So if the market is to move higher, it needs to be trading above this number. The more it continues showing resistance on this number after many attempts, the more we might be looking at a market that month to month might be suggesting that if we cannot break out, that eventually we run out of momentum, run out of juice, and that we look at the potential for a major correction. So failing to hold above this 2107.39 level might ultimately bring this market down. A breakout above this would be very bullish. Eric Muadh, Muadh.com for subscribers. Be on the lookout for part 2 of this weekend's market analysis. I should have that ready for you by Sunday. Peace and blessings. I am out. Woo!